I know. That time just flies right by, doesn't it? Time to get back to work tonight, guys. It's Tuesday evening. It's July the 14th, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to get us ready for the best entry setups for tomorrow. That's Wednesday's trading session. And I got a jam-packed, pretty exciting video for you guys tonight. The charts are all prepped up in the background. As you can see, we got some gold, we got some oil, and we got the E-minis on our radar for tomorrow. Lot of big moves that we saw today. We finally got the reversal we're talking about from last night. It took a little while to get that reversal, but now the bulls are running hard, and I want to make sure you guys are ready for the best setups for tomorrow. I have the whole entire plan ready to go. Before we jump in tonight, though, and get our hands dirty for tomorrow's trade setups, I just want to make sure to remind you to subscribe to our YouTube channel. That way you never miss all the good stuff we publish every evening on this newsletter. And don't forget, if you have any questions tonight, anything at all, type those questions in the comment section below, and I'll get them answered as soon as possible. And don't forget, if you're anything like me, if you tune in every evening, if you rely on this video to get your mind right and get your charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys and gals spending some time with me every evening on this video newsletter. So please don't forget, subscribe to the channel, drop those questions if you have any questions, and hit that thumbs up button for me if you guys see value in the video tonight. But enough of the introduction. Let's get this party going. Time is ticking. Let's check the calendar for tomorrow. Tomorrow, of course, is a Wednesday. I want to make sure you guys know exactly what's on our radar for tomorrow. Wednesday, middle of the week, middle of the month. I believe it's the middle of the month there. How many days are there in the month of July? We'll worry about that later on. Tomorrow, of course, though, is hump day. It is Wednesday, July the 15th. What do we have here on the schedule here tomorrow? Well, we got a bunch of news tomorrow, you'll notice, and the next couple days here are going to be kind of a peppering of lots of news that's scheduled and unscheduled. We'll talk about that as we go. Now, tomorrow morning, the big news of tomorrow is that industrial production number at 9:15 and the petroleum status report at 10:30. Now, that industrial number at 9:15, that is probably going to be where we see some of the biggest market-moving responses here, and that's just ahead of the New York Stock Exchange open at 9:30. So we may get a bit of some shake and bake tomorrow into that opening bell. So give it a little bit of time. 9:15, we go right into 9:30. If I had to guess tomorrow, you want to be looking at those setups 9:45, 10 o'clock, and 10:15. The biggest news tomorrow for most of us is that 9:15 industrial production. But again, look what time of day it is. It's just before the opening bell at 9:30. So we may see a bit of chop and slop around 9:30. Might be similar to what we saw today. And just like today, once that dust settles after the opening bell at 9:30, 9:45 to 10:45 tomorrow, I would imagine is probably where you're going to get the best setups after that big news. And then, of course, as the market digests the opening bell. Now, later on in the morning, we got that petroleum status report tomorrow at 10:30. Now, keep in mind, this only applies to crude oil traders, right? Only applies to oil traders. Every Wednesday, 10:30 Eastern Time, we get the petroleum status reports, also known as the weekly inventory report. My rule of thumb on a Wednesday for oil trading is after 10:15 and then after 10:40. So basically, between 10:15 and 10:40, I'm sitting on hands for oil. Oftentimes, oil slows down dramatically as of 10 o'clock Eastern Time. So, be aware of that. If things are pretty slow at 10:05, 10:10, you know what's happening. Oftentimes, though, we'll get some pretty good setups right after 10 o'clock, and then it goes right into that lockdown at 10:15, ahead of that 10:30 news. And then, of course, after 10:40, once the kind of dust settles, right after that news comes out, dust settles a little bit, we get back after it at 10:40 in our trade room tomorrow. So most important numbers tomorrow, again, industrial production. Again, I would hope we get some setups, 9:25, 9:30, but we're going right into the opening bell. So think about 9:45 to 10:45 tomorrow. And then again, if you're an oil trader like we are in our trade room, be aware that block from 10:15 to 10:40 is going to be a little bit challenging watching if you're an oil trader. Now, tomorrow afternoon, if you do have some time, tomorrow afternoon might not be a bad idea to stick around for that beige book. The beige book, of course, are the notes directly from the Fed. Of course, the Fed talking all about stimulus right now. So that might have a bit of an impact tomorrow afternoon. It's always a bit hit or miss on those beige books, but that is definitely something to keep your eyes open if you're at your desk 2:15, 2:30 tomorrow. Definitely something to keep our eyes out for tomorrow. Now, I should also mention tomorrow as well, we are watching the next couple days roll over on oil. Right now, the crude oil market is trading on the the 0820 contract is the current front month right now. The 0920 contract is coming up next. We will likely see rollover probably not tomorrow, but Thursday or Friday. I always start to look for rollover after the 15th of every month. So it's a good rule of thumb. The 15th of the month, middle of the month. Usually the 18th of the month is about as late as oil will roll over. There's no other rollovers this week here. Gold's going to wait. The E-minis are going to wait, right? We just rolled over the E-minis at the end of June. So it's just the oil here this week. Once we see the volume is higher on that 920 contract, again, probably not tomorrow. Think Thursday or Friday this week. And obviously, I'll keep you guys posted on that in the trade room and, of course, on this nightly newsletter. But in case it does happen tomorrow, if that 920 contract has more volume tomorrow, once that 920 contract has more volume, we will start moving to that 920 contract and trading that on oil. What else do we have here going on right now? Well, don't forget, of course, this whole entire week, this week and next week are going to be the earnings season. We got some of the biggest companies, not really anymore, but some of the most well-known companies on the S&P are reporting this week. Next couple of weeks will be the tech stocks, right? Of course, later on this week and, of course, in the next week. So we'll be looking at more NASDAQ late in the week and next week, but really this week, the main focus here is the S&P. The E-mini S&P will probably be most affected by this earning season. And then don't forget, the next couple of days here, Wednesday, Thursday, Friday, as we start going into OPEX, I know I talked about this last night. There's a lot going on this third week of the month. OPEX is on Friday, so we do expect to see increased volatility, right? I know I almost took a breath there for a second. I don't know how much more volatility we want to get in these markets right now, but we do expect to see increased volatility as we go into the latter half of this week. So watch rollover if you're an oil trader. Heads up around that employment number, that inventory number at 10:30 tomorrow. And don't forget, right? I know I'm covering a lot right now on this video, but we do this together every morning in our trade room. The easiest thing to do, the easiest way to succeed with this is to come out and trade it with me tomorrow at the opening bell, 8 o'clock Eastern time. We open up. I'll put all of the membership links to come join me tomorrow in the trade room. I'll put all of that right in the description of this YouTube video. If you're on the blog at sidewaysmarkets.com right now, I'll put the big button for you right below me tonight on the trading blog. So get registered, come out and trade this stuff with me tomorrow. If you could only be at your desk tomorrow, though, for an hour, that 9:45 to 10:45 block, and we'll talk more about earnings and OPEX, right, and rollover. We'll talk more about that, of course, in tomorrow night's newsletter because time is ticking right now. Let's get these charts up here for us tonight. We got some E-minis, of course. We got some oil. And we got some gold on the radar here tonight. Why don't we grab the E-mini S&P? Because the S&P is in a very familiar spot. We saw something very similar to this last night. It was a different story last night. It was a bear market, right, last night, and we were anticipating a bullish reversal. This is a bull market now, and you're going to see a lot of similarities to last night's newsletter or yesterday's chart. Now, if someone was to ask me, Joe, what happened today on the S&P 500, I would say the day began in a range. The day then broke free of that range and then snapped back into the range and rotated symmetrically all the way to the other side of the range. We call these pendulum swings, right? So if somebody was to ask me, Joe, what happened today, man? I missed the markets. What happened? Began in a range. We saw that bear breakout. that reversal. You can see they got trapped in there for a little bit, right? It's pretty choppy there in that kind of 11 o'clock to 12:45. But you'll notice, though, they quickly got that breakout. 1, 2, 3 breakout. But look where the breakout happens to land. It lands conveniently equidistant, right? Equal, symmetrical to the other side of that range. Again, we call these pendulum swings. So at this point, we know the market is bullish, but it's a very convenient location that they stopped here right now. It's very difficult to justify buying the next pullback right now, especially since we're all the way up at a big two-legged move. We're up around some major resistance. So we're bullish, but we're finishing the day at a very strong multiple levels of resistance, and we still have that range waiting down there, acting as a magnet. Now, I'm sure most of you guys thought I was crazy last night when I talked about the reversal in last night's newsletter. You might not think I'm as crazy tonight. Well, you can still think I'm crazy. Crazy's good sometimes, I guess, right? It's a fun crazy, but I'm just crazy enough to look for the same basic strategy for tomorrow. If I had it my way tomorrow, if I got my favorite setup for tomorrow, what I would do is I would try to catch some buyers who are thinking this market now is going to keep on going higher, not knowing where we are, right? Not knowing where we are. We're very bullish right now, so I can't be too aggressive being a seller here. So I need some sort of short setup that allows me to trap in some of these buyers because I'm going to need their help to fuel this thing going back down in. But there's one problem too. I have a trend line in my way. Yeah, that's a big problem. And so I have, my job's not going to be very easy. I need a pattern that ropes in the buyers. I need a pattern that allows me to avoid selling into that level of support. Oh, and by the way, I need this pattern to be reliable enough when I'm going against all this bullish momentum. There's only one pattern that fits those rules, and that's called a two-try trap or a nested failure with a trap pattern. And it's a pretty simple pattern here. I'm hoping that as we pull back, I'm hoping that buyers will try once. I'm hoping that buyers will try twice, and I'll be able to find a little trap high above that high. This is what if the market called me tonight and said, Joe, what are you looking for tomorrow? I would say, give me a two-try trap or a nested failure, right, with a trap high here. Basically, as we pull back, I want to see buyers try once, pull back further, buyers try twice, so I can sell just above those highs. Now, you'll notice this little pattern, again, this kind of nested failure pattern, right? Buyers try once, buyers try twice with the trap high. The reason why I want to see a failure is because of the bullish momentum. The reason why I need a trap is because of that rising support, right? That will be the first pattern I'm looking for. Again, it's a nested failure or simply a bull trap, right, above those highs. Now, what if we don't get that type of pullback? What may happen here is we may end up sliding back down into that trading range. If that happens now, keep your eyes on that low of the channel. And what I'm looking for is I'm looking for a very similar pattern here. If we just slide lower here and slide underneath that trend line, what's going to happen is you're going to see buyers coming in. They'll try once, they'll try twice. Aha, that's exactly what I'm looking for. I'm looking for those buyers to try a couple times, right? Let those buyers try to buy it once, let them try to buy it twice. And you'll notice I keep using let the buyers try. The reason why is because because it's a bull market, I have to use the buyers' stop losses as the fuel, because I can't rely on the momentum of the market, right? If momentum was bearish right now, I wouldn't need the buyers to get stuck so I could sell into their stops, right? That's why I'm doing it that way, because the only way to really get short in a bull market is to wait for buyers to buy a pullback and then sell right into those stop losses. That's exactly what this pattern will do. Once those buyers try once, they try twice. And again, I want to use, if I can, I want to use the underbelly of that channel. Now there is also a chance too. There's a couple other options here to get short here. One option might be we might simply drop right back down into that range. If we drop back into that range, just sit tight and focus on selling above the range with what I call a 2-try failure pattern. Wait for a breakout. Wait for the breakout buyers to buy the pullback. Once that happens, you know exactly where their stops are, and you can sell right into those stop losses, right? It's called a 2-try failure pattern, right? So we see some traps. Do we see some failures? Or, there's also this reality too. We may see a strong move down. We may see a pullback to the moving average, and we may see a jump off the moving average. If that happens and they ignore that range, it's on. You know exactly where they want to go. Now they want to go back down to that 31.20 area. I don't want to chase after the market going lower. I'm going to mark up that low. I'm going to mark up that high, right? I like to anticipate channels before they happen. I never like to wait for a proven channel. I like to anticipate channels, right? So I'm drawing off those lows. I'm bringing up off that high. I'm finding that kind of hidden channel, and I like to always grab that first test. The first test is always the best test. Well, it's always the most reliable test, right? It's that first squeeze, right? So when I see, for example, the buyers go 1, 2, 3, I draw off of that level, I bring it down here, and I want that first test, right? I want that first test. The first test is always the best test, right? It is always the best test on those channels. So that's another option, right? What do we call those, by the way? We call these 1, 2, 3 reversals into hidden channel pullbacks. 1, 2, 3 reversals into hidden channel pullbacks. And don't forget, guys, we're going to trade all the stuff together tomorrow. So I'll be right here with you to do it all with you. If you're not going to join me tomorrow in the trade room, the next best thing is to grab our free trading course. Our free trading course will teach you all about failures and traps and pullbacks and reversals and everything in between. In fact, you'll see hundreds of examples of how we apply those setups to our favorite markets. Grab that link just popped up in the upper right-hand corner. Not to worry, pause the video. I'll be here when you come back, right? Grab that free course, though. It is worth the effort. Invest in your education. That way, the next time you come back and work with me on this newsletter, you'll know what those patterns actually look like. Now, let's keep going here. How about some buy setups? Could I buy this market? Well, the most important thing is we got to be aware of where we are, right? We are right into that major objective. The measured move is right there. So if I want to be a buyer, I know where I want to buy, right? I want to buy down in this area, right? Down in this little area right here, the low of that channel. The problem is I'm worried about the sellers, right? I just don't trust this. And so I need a pattern that allows me, because I'm concerned if we pull back, I'll bet you're going to see a lot of sellers who are probably going to try to short this thing back down into that trading range, and that's what I got to worry about, right? I got to worry about those bears. So how can I absorb the bears while still staying patient here now for a long side? That's an easy one. I need another nested failure pattern. I want to see a pullback down to that low. Now, once we get that pullback, now watch closely here. I want to see bears come in. Let them try once, higher high. Let them try twice. I always like to draw that trend line coming up off that low, right? I'm looking for that buy. Again, I call these nested failure patterns. They're called nesteds because they have a failure inside of a failure, right? So that's my trick here to avoid getting too aggressive into this level of resistance. Now, even better would be if the market got knocked down here, right? If the market gets knocked down a little bit, then it comes back. This would honestly be even better. If it gets knocked down here a little bit, then we pull back to the moving average, right? Bears try once, higher high. Bears try twice. This would be even better of a long setup, right? If I really got my way on that, right? This one would be a deeper pullback, and now of course I got bears trying once, bears trying twice, and then up we go from there, right? Now again, I'm looking to short this thing right now, but if I see this thing pull back and start to 1, start to 2, it's going to be very difficult to resist that temptation to buy right into those stop losses as we go. That will be the plan as this market pulls back. Now, what if we run higher? If we do run higher, the most important thing is, where are we running to? How about that 32.26 level, that major high? There's a couple different ways I can get long as this market pushes higher. For example, if we hold the pullback and jump, I can mark a trend line off that high. I can find that hidden channel and I can buy the pullback off that hidden channel, right? The first test, right? The first test is the best test, right? That first test off that channel low. Or maybe this market jumps, we get a shallow pullback to the moving average, a higher high, and a trap low. Here's another one of my favorite patterns. These are called two-try trap patterns, right? So strong jump up. The key here is, here's how these work. The key to these two-try traps, and again, you want to know where we are going up there, right? Up to that 32.26. The key is, it's a strong jump up. The pullback to the moving average is usually pretty shallow. It barely touches the moving average. Then it jumps, makes a higher high. So shallow pullback, higher high. Now look for that trap low. Trap low is very, very reliable in that situation. And I'll be honest, I always like to try to add some of these anticipated channels, some of these hidden channels up here to really add some additional reliability on that pullback. Now, there's also potential for a spike in channel. You know, the market may rally higher into a spike in channel here. So there's a lot of other nuances to this chart. I could go on for hours about all the different patterns we could look for, but I'll save the good stuff for tomorrow morning in our trade room. Speaking of which, don't forget, I'm going to put all of the membership information, once again, the trade room stuff to get registered for tomorrow morning's trade room. I'll put all that in the description of this YouTube video. So definitely get registered for the free course or for tomorrow morning's trading session. It should be another pretty darn good day in our trade room. How about some oil? How about some oil? Now, oil, again, we got some rollover concerns on oil, so keep your eyes on the volume count, right? Keep your eyes on the volume for oil. Tomorrow is also an inventory day. So if there's one market tomorrow that might be more difficult than the others, you're looking at it. Wednesdays always tend to be a smaller window of opportunity just because we got to worry about that lockdown period from 10:15 to 10:40, and it does seem to have a bit of a self-fulfilling prophecy to it as we get later on in the session. Now, if somebody was to ask me, Joe, what happened today, man? What happened on the oil? I would say the market, of course, got a 1, 2, 3 reversal. We had a strong run higher. That strong run higher went sideways into a small range. And like we usually see in a range-bound market, we saw a bear breakout, a bearish pullback that failed, and a retest of the high. By the way, this is the same exact pattern I was talking about on the sell side for the S&P. So how would I describe this market? I would say today there was a strong bull run, right, for the bulls on oil into a little tiny trading range, a shallow pullback, a seller failure, and a retest of that high. Most important thing we know is we saw a strong run and we're finishing the session right up at that high. The high, of course, confirms the bears are very much well and alive. It also tells me that the buyers got what they wanted. Right? Mission accomplished. When I retest that high, that is kind of the one thing we know about a bull market. The buyers are always trying to retest those highs. So, knowing that, the basic pieces of this is a bull market into a range. What's the best way to trade a bull market into a range? Well, I want to be a buyer. I want to buy at support below the range. Now, where could I find some support below the range? Well, I love that trend line. That trend line looks great right there. Really like this channel line there. That looks really nice. Don't forget that reversal line at 40.05. You can see it all comes together right inside what I've called the battle zone. So now I know where I want to buy. I think the most important thing, to be honest with you, is getting underneath that low at 40.10. I think that's going to be the most important piece of this puzzle on the oil. If we go higher, the problem is we've got a lot of problems here overhead. Got some major tops there, got some more major tops above at 41. So you got to be careful as we go higher here. So we know the market is bullish. We know we definitely do not want to buy right now. We want to buy at a much lower price. What do we think are the best options here to get long at that lower price? Well, we know it's a range. And so anytime I see a range, I always know that failures are always going to be my best bet. Now, failures, a lot of what it has to do with is how the market pulls back. If I had it my way tomorrow, if they gave me what I want tomorrow, I would get a nice deep pullback all the way down to that support trend line. If I had it my way, I would use that support trend line. I'd get all the way down to that support trend line. I'd get the moving average coming over, of course. The sellers, I'd wait. I never try to pick a bottom. I don't try to pick that bottom. It's not only is it stressful, it's just not a very reliable way to do it, because if I try to buy that bottom, the bears could easily come over, sell off that pullback, stop me out, and then run right back ahead of time, right? Run right back in my direction again. That happens a lot in these kind of breakouts or these sharp pullbacks. What I'd rather do is not try to buy the dip, right? Again, not try to pick the bottom on that. Don't try to pick the bottom. Just wait for those bears to come in. Wait for them to get short off the moving average. That tells me exactly where their stops are. That tells me exactly where their pain points are. That's the key, right? And then hit them, right? Buy right into those stop losses going higher. Now, oftentimes those patterns will result in what we call a failure into a pullback combination. Now, this is all going to be how this thing sets up, obviously. The failure should be relatively easy to find. It's the pullback pattern, the follow-up pullback, that's the one that's a little more difficult depending on where we are in the range. As you can imagine, if this market was to keep going higher and then we pull back from there, right? Yeah, that's not going to be a great place to buy that pullback, all right? So hopefully you can see kind of that little bit of nuance there, right? You've got to make sure that pullback happens before we get back up into that trading range. So again, that is a seller failure into a pullback, basically a combination setup off of that low. Now, we have seen quite a bit of strong shots lately. So if for some reason the market shoots underneath that trend line, there's been a lot of real big volatile moves here lately. If for some reason we did shoot right underneath that trend line now that momentum will be a little more powerful for the bears. In that situation, because I would be concerned with another leg going lower with such momentum like that, this is where I use those nested failure patterns. I wait for the bears to try once. I wait for the bears to try twice. I like to find those trend lines, wait for one, wait for two, and then buy back up from there, right? You're buying into the stop losses of those sellers. So those are two really reliable setups that hopefully we'll get that going. Now, another pattern I want to bring to your attention is if we keep going higher. Now, if we keep going higher here, again, we've got that high overhead. It's not a small deal, right? It's a double top high, and then it's not just that one, it's the one right above that one too. So we have to be aware of where we are whenever we look for a breakout, right? We're not just simply trading patterns, we're trading the patterns in the right locations. So if I'm worried about resistance overhead, what's the best pattern for me to use if I'm worried about overhead resistance? I'm trying to buy and I don't want to buy into resistance. You could also say I'm trying to buy, but I don't want to buy too high, right? Buying too high or buying into resistance are pretty much the same thing, right? So how do I avoid buying high? How do I avoid buying into resistance? Trap patterns. Traps are always my go-to pattern whenever I'm worried about overhead resistance, or in the case of the S&P market earlier, I'm worried about those sellers. So if we get that strong run higher here, what's a trap look like? It's one try for the bears, higher high, two try for the bears, and then a trap. So this is the pattern I would like to get as we go higher, right? We want to look for that strong shot higher. We're up inside kind of this sell zone overhead. It's not much of a sell zone. It's just a resistance zone here overhead. I do want to be a buyer, but I don't want to buy too high. Wait for that strong push up. Wait for that shallow pullback again. Higher high in price and that trap low. Now, the market may really impress us. We're dealing with always lots of volatility here this week here. So let's say, for example, we bust higher, the market holds the pullback, and we jump right through this area. Good for them. Now I can mark that high, I can mark that low, and I can now confidently buy. Again, the first test is the best test, right? So, again, we know where we are. A lot of resistance there overhead, but as I mentioned earlier, right, if the market can shoot up, if they can hold that pullback and they can jump, well, I guess that's not an issue we had to worry about anymore. Now we'll mark up that high, mark up that low, and again, the first test is always the best test. So now we know the plan here if the market pulls back, right, or if the market runs higher. Be very careful chasing after this thing because of that overhead level of resistance. Now, knowing this is a range, what if we go sideways here? Right? What if we just keep sitting here, going sideways here? If we sit and go sideways, we sit on hands. And what do? We wait for a pullback. We wait for that pullback. We basically wait for this exact same pattern, right? But again, I want to see it a little bit lower, right? I want to get it just underneath that 40-10 area. I want to wait for that breakdown. I want to get that moving average coming over, get those bears to sell off the EMA. That's when you know exactly where those stops are, and I can buy right into those stop losses. Now, there's always some exceptions to every rule. For example, a shallow pullback, I can use a trap right off the low of that channel. You know what I mean? So there are some different variations of this. We'll go into more details tomorrow in the trade room. So if we don't get that deep pullback, we can look for traps during shallow pullbacks. But again, I want to get that nice deep pullback down below that 40-10. So how do we sell this market then? If the buyers have control right now, I'm worried about this overhead resistance. How do we sell a bull market that, for the most part, and this is important, for the most part, isn't really at a major turning point yet, right? We're not quite at the highs of yesterday. We're not quite at a major turning point. We are at a measured move, and we are inside of a range. So let's talk about this. Now, the most reliable short trade would be after a reversal. Now, I never try to predict reversals, right? But I do anticipate where reversals may happen. They may happen again, measured move up here. So let's see what a reversal look like. There are really two reversal patterns. The one that I really like to wait for is that 1, 2, 3 reversal pattern. That strong move down, that pull back to the moving average, and that strong jump off. And I realize it's not as exciting, but it's a whole lot more reliable. It really is. Wait for that strong pullback. I'm not trying to sell that first one. Remember, that could easily fail and go right back up into that range again, right? So be careful there. But if they can hold that pullback and jump off the moving average, now I know where those lows are. Now I can find that hidden channel. And as always, right, looking to sell short off the first test, right? The first test is always the best on that new hidden channel. Where's our goal for the bears? Back down to retest those lows at 39.13 and 39.07. Now, how about a reversal pattern without a reversal? Right? What would a reversal pattern look like? Well, I think the biggest criteria right now is in order for me to want to sell short the reversal pattern, I'm going to want to see us continue to go sideways here for at least a couple more hours here overnight. I'm going to really want to make sure this top is solidified, this range solidified. And when that happens, I can then start looking for what I call a crown reversal pattern. As we go higher, I want to get up into these areas of resistance. I want to use the buyers try once, buyers try twice, and trap high above that high. You've got to remember though, right? This is a counter trend trade. So you want to go half size, or well, if it was me doing it, I would go half size position. If I was a rookie trader, I would stay away from these counter trend trades. I would focus all my energy as a rookie or as a new trader, or if you haven't found consistency in your trading yet, stay away from those reversals, because it doesn't matter how good your pattern is or how good the location location is or how good the indicator is, if you're trading against the momentum of the market, you're going to get lower probability trades, and that will eat away at your winning percentage. It's very common for a rookie trader to really make their job more difficult because they're taking half their trades are counter trend trades, right? So you want to make sure these counter trend reversals, this is a great pattern. These crown reversals, again, up inside that resistance. After we confirm this is a range, then market goes up. Buyers try once, buyers try twice, trap high, and then back down into that range from there. But again, right? But again, this should be a small fraction of the number of trades that you take every week should be those reversal or counter trend trades, right? That's why I say those 1, 2, 3 reversal patterns are so much more reliable. I realize, they're not sexy, right? No one's going to brag about them to their buddies. I called the top on oil today, right? You're not going to do that, but you know what though? There's no trophy for calling the top, right? There's no first place ribbon for that reversal. All that matters at the end of the week is, are you in the green? And if you wait for the proof of the reversal, there's a better chance you'll be in the green. All right, oil is looking pretty good here for tomorrow. We've got the buy side, I've got the sell side. How about questions? Any questions so far? Drop those questions in the comment section below. I hope you've hit that thumbs up button. I hope you give it a like here tonight if you guys see value in the video. Let's wrap things up here now on the gold. Wrapping up here on the yellow metal, the gold futures. What do we know about gold right now? Well, I would say we got a strong two-legged move, right? 1, 2, and we're ending the session in a range. So we kind of find ourselves in a similar spot to what oil was doing or what was on oil, right? It's a strong bull market up into a trading range. That double top confirms it's a range. Well, double top is a very significant heads up when I find myself this late in a two-legged move, right? When I see double tops up here, I start to think, okay, we're going to probably mark up those tops, mark up that low, find that range. So really the most important kind of piece of this puzzle is it's a bull market, that is for sure, but it's in a range. And we can easily see we are just a little bit above a measured move objective, and you'll notice all the way up there, right? That 18.8, right? That objective as well. So that is definitely something to keep in mind as we go higher because that's considered major resistance. So we know we're bullish. We know we're in a range. What do I do in a bull market into a range? I buy at support, but most importantly, I buy at support underneath the range, right? We're not trading range breakouts. We're definitely not trading breakouts. So where can I find some support here? There's a lot of great levels of support. First of all, I've got that what I call expanding trend line, expanding triangle support. You're going to see how this could be setting up here for an expanding triangle. Love that expanding triangle support. Really like this 1808 area, right? Right at that kind of little hidden reversal line, as we call it. And then also, too, if I line up these highs down off that low, that is a great spot, right? That is a great spot there on a nice deep pullback. So we can easily see there are lots of support. We also can see there's a lot of resistance here waiting overhead. So if I want to be a buyer right now, what would be my kind of home run setup here for tomorrow? Oh, I know exactly what my home run setup would be. It'd be a nice deep pullback, get me down to the low of this channel. Now, once we get that really deep pullback here, here's what's going to happen, though. Let me get this trend line out of the way so I don't confuse you here right now. If the market again, if we get that deep pullback now down to the low of that channel, what's going to happen is these bears are going to start beating their chest. You know what I mean? They're going to start getting overconfident, and they're probably not going to give up without a fight. So in these situations, I like to wait for 1. I like to wait for 2. Let those bears try twice. Once they try twice, now you know exactly where their pain is. Now you know where they're exiting for a loss. Now you know where sellers become buyers. And that's the trick. That's why failure patterns are some of my favorites. Now, normally, when you get a deep pullback and you get bears try once, bears try twice, a lot of times this thing really races, and it races fast. So you might not get that pullback, right? We oftentimes get that pullback that follows. You might not get that pullback. If you don't get the pullback, look for that 2-try trap. And remember, the nuance of this is you've got to do it before you get back into the range. It's a seller failure into a 2-try trap. Or another way to look at this too would be, and again, that will be kind of my home run scenario for tomorrow. If you put this trend line back on, you can kind of see where this may come together here tomorrow as well, right? Now, obviously, this trend line's not very effective right now, but if we end up, like I mentioned earlier, if this does end up becoming an expanding triangle, we may find ourselves back down the low of that trend line into that area of support. And if I can get that trend line to come in, if we can hold that trend line here, get some bears trying to sell that next pullback, that's exactly what we need. We need those bears to get stuck so we can buy into those stop losses. I'd love to get a seller failure pattern, right? A seller failure pattern off the moving average, off the support level. All right. I know it's a lot to keep track of, but again, as I mentioned before, not to worry. We're going to do it together tomorrow in our trade room. You'll be able to do it right there with me. That way you know exactly what I'm watching and we can do it together. Most important thing is going to be, though, get down to support, rope in those sellers, buy right into those stops for that rally going higher. That would be a fantastic setup here for tomorrow. And then, as I mentioned earlier, there's always some nuances to this. For example, we may see the market kind of run sideways here. We may not get that deep pullback. It may just trap low. If that's the case, 1, 2, I don't want to trade inside that range, right? I want to trade just below it. That will be the best entry if all we get is that very shallow pullback here just below that prior swing. So I've got us covered, whether it be a deep pullback, a shallow pullback, or whatever pullback we get here. Now, what if we don't get any pullback? If the market goes sideways, what do? We wait to get underneath. We wait for that seller failure, and we buy into those stop losses. What if the market jumps? Right? What if that market jumps? If it jumps higher here, if they can hold this pullback and jump, they've got to really do a good job of getting through this area here. If they can get through that area, we get a lot of wide open space up to that 1829.8 level, right? So if indeed, right, if we can get all the way to that area, that's the hard part. The hard part is going to be we got to break through it, right? Got to break through it. So again, one pattern would be, if I can zoom a bit closer on this for you, we've already got that strong move up, right? So if I get that pullback and they just launch, I can now mark up that high, I can mark up that low, and I can buy the pullback to the low of that channel, right? First test is always the best. Another setup I would keep an eye on would be if we go running 1, strong move up, 2, and then pull back from there. If that happens, now I'll adjust that channel, mark up the high there. I'll probably, in that situation, and there's always some nuances to this depending on how the breakout looks, whether or not I draw the trend line off of that low or off of that low. It all depends on kind of how the market breaks out. I wish I could give you more definitive information on that right now, but it really depends on how the market breaks out. Not a lot of things are black and white in trading, right? There's a lot of gray area in the business of trading. We go over that stuff, obviously, together in our trade room. But that is something, right? That's some food for thought here, right, as we go higher here. So 1, 2, 3, breakout, pushing through all of this overhead resistance, right? And then again, getting that first test, right, is the best as we go. If the market just rips, you know what I mean? If it just rips higher here and we see that relatively shallow pullback, that higher high in price, now you know there are traps down here, right? If we see that strong kind of race higher, shallow pullback, higher high in price, trap low, I'm always trying to incorporate, right, the lows of those channels. Again, plenty of options if we can get this market to break higher on the gold. Just be very careful up here, though. Again, be very careful up in this area. Could I sell that? Could I sell that area? I could. It's a major turning point. It definitely is, right? That is a major turning point here. So I could sell that area, right? I can go up. Again, got to get that 18 high. Wait for the buyers now to come back. Try to buy it once. lower low, try to buy it twice. Again, this should not be your number one pattern, right? This should not be it can be your favorite pattern, but it should not be the one you take every day, all day, right? You only want to take reversals at major turning points. And I always like to have some additional resistance there, right? I want to see some completion of an objective, right? So we just retested the high. We got the measured move. We're at a major turning point. I shouldn't be looking for a trend reversal until we get where the buyers want to go. Where do buyers want to go? Buyers want to retest a high. Buyers want to get a measured move. Buyers want to get to that next objective. Once they get there, then I can start to look for that next trend reversal. Last but not least here, what's a reversal look like? Reversal looks like this, right? Strong move down, pull back to the moving average, strong jump off. Again, mark up that low, mark up that high. I am not drawing this to scale right now. Right? This is not drawn to scale. It could happen earlier. It could be a strong move there. It could be a pullback there. It could jump off there, right? I mean, it doesn't need to be as big as I'm drawing it. I'm just trying to make sure that you can see it. That's all. The key here, though, is 1, 2, 3 reversal, then that new hidden channel pullback. Where is our objective if the bears take control? Back to retest the low. Where's the objective? The bulls keep it up around that 1818, right? Buyers want to retest highs. Sellers want to retest lows. Relatively simple strategy here on the gold. Tomorrow, another big day in our trade room. Hope I'll see you there with me. And come out and join me tomorrow morning in the trade room as a member. I'll put all of the membership links for you guys in the description of this YouTube video. So grab that free course or get registered for tomorrow morning's trade room. And I'll see you guys at the opening bell tomorrow morning. Don't forget, call that toll-free phone number if you have any questions along the way. And as always, I'm always here to help on live support if you guys need help on the chat. All right, guys, keep in touch. I'll see you guys tomorrow with the opening bell. If not, we'll come back and do it again tomorrow night on the next edition of our nightly newsletter. Have a great day out there. Enjoy the rest of your evening. Thank you for tuning in, and we'll see you guys next time. Adios, amigos. Bye-bye for now.